ACM Research. Is this the next stock to go parabolic? Let's look into it. Before we get going, smash that like button, subscribe if you've been with us a while and haven't done so yet, or you're brand new and you like what you see. Check out the Trade Cave store, link in the description, as well as the channel bio, and let's get going. ACM Research. What does ACM Research do? All right, let's zoom in here. ACM Research is a publicly traded American semiconductor company that engages in the manufacture and sale of single wafer wet cleaning equipment used to improve product yield. All right, so it's a US-based company, but currently the majority of their business is done in China. Let's go look at their biggest customers. Is it here? No. Is it? No. There it is. Their biggest customers are Yangtze Memory Technologies, SMIC, China's largest foundry and Chinese state enterprise that works with the CCP. HLMC is another Chinese company. You get the picture. All their big customers are Chinese. Now, that does concern some investors, myself included, especially since there have been some sanctions in terms of what types of technology can be sold there. So there are some concerns there. Now, that concern is alleviated a little bit by this. Now we come here. So this is ACM Research. This is a Q2 2024 results. Okay, so here we go. One thing. So the company recognizes that is an issue in terms of having the majority of their revenue coming from one country, and that country being a rival of the country that they are established in. Okay, the irony is not lost on them there. Okay, so they are taking steps to build out more in the United States, and that's the part that I like. I like that they're starting to build out more at home, make more partnerships at home, and that it's a diversification of their revenue flow, of where they're getting their revenue. And everyone should appreciate that, just the diversification of revenue and revenue sources in terms of geographic revenue sources, because if you're just trapped in one market, even if it's just the United States, anytime that market suffers any kind of downturn, you're going to be having a bad time. Now, if you're diversified across different economies across the globe, if one market's down, others are inevitably up. So that's kind of what I want to take away from that here. So this is what I'm interested in. They just came out with some new tech that they're working on, a new panel electrochemical plating tool, which positions ACM to participate in the growing demand for AI solutions. Basically, what it allows them to do is they have a proprietary horizontal plating that enables advanced packaging with sub-micron features on square panels. Basically, it just helps them to better package wafers and other tech that they're going to need for AI and other things to be shipped more carefully. And that is really super important because these are very sensitive things that we're talking about. The other thing is that they are making good progress with global development activities and recently entered into an agreement to purchase an R&D facility with a clean room in Oregon to expand their U.S. footprint. I like that a lot as well. So they understand the need for themselves to expand further into the United States. And if they are the ones creating new proprietary tech, new ways of cleaning and protecting wafers, silicon wafers, I think that we will see them gain some ground in the US as well. So that's pretty interesting to me here for that. Let's go down here. Yeah, so these are the highlights, right? The highlights. So total shipments in 2024 were up 32% from 2023. That's pretty cool. They had this new electroplating technology for packaging. Let's take a look here. New cleaning tool for chiplets. That's pretty fun and interesting. Now, of course, this again, you'll notice that a lot of they're going to talk about their customers coming out of China, because that's where a lot of their customers are currently, and that's fine. But we are looking at their US based. So they got a new order from a US-based foundry. They don't list the customer. It just says, wafer level packaging customer. They don't say who it is. I'm sure there's some sort of reason why, some sort of legal reasons as to why they can't name the customer outright. So they were buying advanced packaging tools from them. When we find out who that customer is, if it's a big one, that would make this stock move quite dramatically, and that's what we're going to look at here pretty soon in terms of just where I think this thing could go, who's investing in it, that sort of thing. Yeah, that's about it. Oh yeah, the gross margin, 48.8%. That's not bad, considering they're not a software company. Software companies are the ones that usually have that 70, 80% gross margin. 47.8% on a physical product is actually not bad at all. Their operating income, nah, that's fine. Okay, that's all we wanted to look at here. Now I'm going to take a look at this company on the Sage Tracker on Webull. All right, so this is ACMR, and we're going to take a look at who owns them, their ownership. Let's scroll all the way back here. So their ownership, top 4 owners. Top number 1 is BlackRock, number 2 Vanguard, number 3 Geode Capital, don't know who they are exactly. Number 4 State Street, number 5 Morgan Stanley. I significantly recognize at least 3 of those names. No, 4 of those names, sorry, 4 of those 5 names. And then if you go a little further down, Invesco is also in there. Now take a look at the prices that they're invested at. Invesco's at $23.53. BlackRock is at $18.98. State Street is at $19.71. Vanguard got a deal at $12. Geode Capital also got a pretty good deal at $17. It's currently trading at $19.49, meaning that both State Street and BlackRock, well, BlackRock overall, State Street not so much, they're almost break even, are pretty much trading at a loss right now for their investment in this company. So they do have some investment in this thing going up. BlackRock owns 6% of the company, Vanguard 6% of the company as well. Well, BlackRock 6.5%, State Street owns 1.84%, Morgan Stanley 1.82%, Invesco 1.72%. All right, now they don't have a lot invested in this company, right? Like this company's only got like a 1 billion something market cap. BlackRock owns 93 million of them, but you see the recent change in shares. BlackRock actually increased their ownership. State Street increased their ownership by 8%. Morgan Stanley by 18%. Invesco actually dropped a little bit by 15%, probably because they were significantly underwater. They probably got into it at a bad price, somewhere up in like the 30s. That's all we're going to talk about there. Now let's go take a look at their company profile. Scroll down to institutions. Well, first thing, institutions own 65.74% of this company. That is great to see. That is what you want to see. You want to see that institutions are significantly invested in a company like this. So you know that it's not just a flash in the pan and it's going to disappear. If we look recently, so BlackRock UK advisors increased by 8% in July. We saw Senegon asset managers, don't know who they are, but they increased by 48% in July. And then the next one was, the next biggest buys and sells was in June. You had Morgan Stanley increased by 18%, Vanguard reduced by 2% almost. BlackRock increased in June by 1.86%. Norg's Bank Investment, don't know who that is, but they increased their position by 73%. Putnam Investment Management went down by 18.47%. Geode increased in June by 7%. Like these guys, they're still buying. They're still increasing their shares. I saw Bank of America. What'd they do? They decreased by 72%, so they got out in June. June. Oof, that's probably not the best time to have gotten out, man, unless you bought it at like 15 or something. Anyways, we see that there's some pretty big institutional investment going into this particular stock here. Now, let's take a look at, so one thing I wanted to bring up. Okay, this here. So we're looking at market cap. Okay, so in the past, so they're currently at a $1.2 billion market cap. So they're a very small company. They're very, very small, considering that some of their customers might be in the trillions of dollars in terms of market cap. Okay, so they're a very tiny, tiny company. They get one big fish, their company's gonna like quadruple in market cap, and that's pretty cool. Anyways, you see market cap's been on kind of since 2022, the bottoming here. It's been on a bit of an uptrend. Now it came back down recently, but it's still kind of in that channel on its way, kind of just drifting up. Its highest market cap ever is 2.5 billion, so it's about double where it currently is, which if the market cap were to double from where it currently is, we'd be looking at a $40 stock. So always remember, it has the potential already from price history. It has the potential to double from where it currently is. So that's very interesting. Let's take a look at their revenue. You'll see here that their revenue has been on a steady increase all the way since 2017 when they went public, just steadily increasing year over year. You want to see that. That's really very nice. Let's take a look at their earnings. You can see that their earnings, again, same sort of thing, right? Steady increase over time, and it got a really increase in 2022 into 2023. So that's really nice to see. Let's take a look at their PE ratio. Their PE ratio is actually 17. Fair value for most companies, especially like companies that are in tech, on it is 15 is great. So we're just barely above like what you'd see average for the S&P. They're not in the S&P, but about average what you'd see for the S&P. And a lot of their customers will be trading somewhere in the 20s, 30s, sometimes 40s or higher. So this thing is really not bad. And you've seen that it's gone as high as 90 before. So in September 2020, ACMR was at a 90 PE ratio. So like there's room up almost 5x on the PE ratio from where it currently is. So that's pretty cool. Let's take a look at the price to sales ratio. How's that been going? Ooh, that is interesting. So it's less than 2 right now. It's almost on par. And it's been on par before in 2022, but it could go as high as 10. So again, even on the price to sales, we could see a 5x increase in terms of the price on this, which would again take it up into those 40s, 50s, very, very high from where it currently is. Now, I'm not saying it's going to happen, but if they can start nailing down some big American customers, yeah, this price is going to go up big real fast. Now, it's a bit of a gamble. Of course, that's a gamble. We can't say that that's happening yet, but they are working towards it. They have been showing significant increases in their revenue, and their market cap in the past has been quite high. Like honestly, they get some big American customers down, I think we'll be looking at this in a much better light. And now, this is very, very interesting. Their price to book ratio is 1.22, meaning they're only worth 22% more than the assets of the company. Let that sink in for a moment. This company is only worth 22% more than the current value of their assets. The average price to book ratio is 3. So the price of this company could more than double, taking us into the 40s, and it would still be trading at an average price to book ratio. This is a clear indicator that this is significantly undervalued at this time. And if we look back here, price to book in the past has gone as high as 8.85. 8.85 price to book. That is huge. So let's say if it did a price to book right now, right? If it did a price to book of 8.85 right now, we would be looking at, let's go over here, total assets. Boop. Total assets, 1.6. We would be looking at a company that is 1.66, and the price to book, the highest it's ever been was 8.85. We'd be looking at a $14 billion company, which currently it's 1.21 times 12. We'd be looking at a $236 company if it were trading an a price to book ratio of 8 right now, instead of 1.22. Now, again, that doesn't mean that it's going to do that. Doesn't mean that it will, but it does mean that it can, that it has in the past, and that it can in the future potentially, if it gets the right customers and gets the right, the right volume involved here. The other thing I like to look at here is the TATL ratio, total assets to total liabilities. So we already looked at their total assets, right? Total assets is $1.6 billion. This is everything in the company. And of course, as we saw, their market cap, they're trading at 1.21 billion. So their price to book is really just slightly higher, right? That might even be off. Doesn't matter. We're not going into that right now. We're not going into any more math right now. 1.66 billion is their total assets. Now let's look at their total liabilities. I lied. We're going to do a little bit of math. Total liabilities is 0.66 billion, meaning that that's just called their TATL ratio, when you take total assets divided by total liabilities. And I believe it's a little over 2. It's like a 2.5 or something. Yeah, 2.515 is the current TATL ratio. Anything above a 2 is great. We're at 2.5. I'm very happy with that. This gives me confidence that this company knows how to make money. It knows, well, one, it knows how to make money. 2, it knows how to not over leverage itself, right? It's responsible with that money. Now let's take a look at total debt, right? So let's see, cash on hand. So the current cash on hand is $370 million. Let's look at that versus their debt, total debt. Again, 150 million dollars of debt versus $307 million of cash on hand, meaning that their cash to debt ratio, again, is more than 2, meaning they have a pretty significant runway right now in terms of cash to debt. They've got a PE ratio of 17, which is about fair value. They're trading, the price to book is 1.22, which is less, which is 50% undervalued compared to the average. So ACM Research has a lot of room to the upside, in my opinion. So let's take a look at their chart. Where do we think their chart could go? So what are we seeing on the chart right now? So I'm seeing a little bit of bearishness on the daily chart. So if we go to the daily chart and we come in here and I draw in here, right? Like this was a bit of an ascending channel. It broke to the downside recently, okay? It broke to the downside recently. We don't like that. If we get price come down below this candle right here, like if price comes anywhere lower than $18, so anything under $18, I'm going to put a horizontal line there. I'm going to make that line red because that's a bad line to cross. It crosses that line, we're going to be having a bad time, okay? It crosses that line. That opens up for potential to see it come back down and test this area here about $16. It's pretty, I mean, it's only $2 if you only have a few shares, but if you've got like thousands of shares, that's going to be pretty dramatic. And if we get all the way down there and it doesn't stop, there's room all the way to the bottom of the channel, which is around 1350. That sucks. We don't want to see that. And of course, if we come and we look at the back here, let's see, we got support all the way down here. If we came down, where's about, yeah, about that area, yeah, about 1350 to all the way down to about 1250. We've got support down there if we were to break that. Now, what could happen here? Now, this could happen if we start printing a green bar on the MACD. You know, the momentum curls up. So, all right, we could see it rebound off the mid ATR band, which is at $18.99, right? And come back up to the top of the ATR band, which again is up here at 2140. And then we got the 200-day moving average at $23. As soon as we find ourselves over $23, the moment we find ourselves over $23 and we break that 200-day moving average, we're back in bull territory, right? And then we have room all the way back up to the 30s. So I'm watching this thing up to about $23. That's where I'm interested in ACMR, is just above the 200-day moving average. Up until, I mean, I might trade it up until then because this is doing a formation that I actually really like, which you'll see it had so we had an ascending channel right here, right? That ascending channel broke, and then it formed a descending channel, right? But that descending channel is really not that aggressive, right? It's being pretty controlled. We had a control up, and we're doing a control down now. Once we break above this little channel here, we're going to do a nice, if we see an impulsive green spike, if price goes up above $20.32, we are going to go up to 2140. If 2140 doesn't stop us, we're going up to 23, okay? So I will be watching that for that, okay? Let's take a look at the weekly. How's the weekly look? That's 2 weeks. I don't want to see 2 weeks. I want to see 1 week. All right, 1 week. Let me turn this off. Turn this off. Okay, the 1 week. We are creating a bull flag on the 1 week. We are getting white bars on the MACD. We are above the signal line on the RSI. That's all very good on the weekly. So we got a bull flag right there. Those two candles. That's a bull flag. So price goes and closes above, yeah, again, $20.38. Anywhere above that area, we are on our way potentially up to, once we get above 21.73, like we're going to hit 21.73 if we get above the previously mentioned spot at $20.60 or something. Then we're opened up to over $24, almost $25 on the weekly. That's pretty great. That's actually really nice looking. Now, of course, the reason I am actually feeling pretty confident about this, though, is because we got this big engulfing candle on August 5th, right? That August 5th week, it had that impulse down, followed by a big engulfing candle, followed by a flag, so that the SMAs could catch up. Now, let's go in here. I don't know what that is. All right, the SMAs could catch up. So let's go in here. Let's close those things out. Let's just reshuffle everything here. Yeah, so it took us below the SMAs. See, we came down below the 20 week, came up, tapped it, tested it, and then went below the 200. So we're going to get above these, right? Once we get above these, all these SMAs, they're all in the same place. If we get one impulse above them, come back to test them at 21.95, that's the signal to go in that we're going to come all the way back to the top of 33. Okay, that's what the signal is there, if that is to happen. Let's take a look at the daily. For the SMAs, same situation, same sort of situation right here, right? Look at this, look at this. So we got this big setup right here. We came down on August 5th and we came up above the 20-day moving average. And then we're going to come back down and touch it and test it. And then we're looking for an impulsive move that takes us up to the 200. 200 we might flag a bit before we go up, and then we'll come back and test it from above, and then it's launch time. That's the sort of thing I want to see to make this a healthy move. Now, we might just see it just absolutely launch, in which case it doesn't back test anything. But if we notice, things like to back test. I mean, even when we came down, look at this. Look at this. Even when we came down, we came back to back test this little area right here, which was, we came to back test the low from June 4th when we came back up just now before curling back over. Things like to back test. So when we came back to back test this, now if this fails, we're coming back down to the bottom of the range here, $15, okay? Now it came back test, it failed. Now if we come back test the 20-day moving average right now, which is at $18.45, and we launch off of that going above the 200-day moving average, well then we can expect that we'll back test the 200-day moving average and then find ourselves, you know, crawling up to 25, 26 bucks, and then from 25, 26 crawling up to like 29, and then potentially crawling up to like the 33, 35, maybe even into the 40s here, and we start getting a fair value on this company. And that's what I'm looking for right now on ACMR. I do think that there's potential here. I'm not in it yet. Of course, none of this is financial advice or a suggestion to buy, sell, or hold any asset whatsoever. I'm just watching it right now. It's on my radar. I want to see them bring in some big fish in the United States. I want to see, basically that's it, really. I just want to see them bring in some big fish in the US, and then it's launch time on this stock, I believe. But until then, or if that never comes to fruition, well, in that case, then I don't know if this would be worth more than, you know, $34 at any given time without getting that global diversification of revenue that I was talking about earlier. So with that said, that's all I've got for you today. Please like, comment, subscribe, share this video. Check out the Trade Cave store, link in the description as well as the channel bio, and have a profitable day.